Just elaborate on that. What is the purpose of stock markets? Everybody wants to create wealth and everybody wants to make easy money, but it's not that easy, right?
No, it's not easy at all. As I had mentioned this earlier also, that stock market is a place to make easiest money in the hardest way. So as a layman, you can think it's very easy to make money. You buy today and sell tomorrow. You buy today, sell after 2 months, and you will get money and you will make wealth. That is impossible. This is not the place to make easy money. So for that you need a lot of discipline, a lot of devotion, a lot of passion, a lot of time you have to give to the market, and then only you can...
How did you start your journey? Tell me about when you came to Bombay. Which was the first stock you bought? How did you identify some of the multi-baggers? You know, stock market I always say is a place of sharks. It's not a plain, place for saints. So how did a shark like you or a saint like you survive?
नहीं, वो हिंदी में बोलते हैं ना, जब वो तूफान आता है तो जो दूब होती है वो झुक जाती है तो वो बच जाती है, जो पेड़ होते हैं वो तन के खड़े होते हैं तो वो कट जाते हैं. So that is the philosophy of life also. And as you asked, first shares which I identified. How did you
start your journey? When did you buy your first stock? What capital did you start with? When you buy, so I want to understand, or perhaps our audience would be keen to know your first investment, your first multi-bagger, and the baby steps which you took.
First stocks I had bought Punjab Tractor. I think I had discussed about this stock maybe way back in 1989 or something. That time it was some 55 rupees. That time tractor industry was actually reeling under pressure. From 1989 onwards, tractor industry has started reviving. And Punjab, there were only few players in the field. Punjab Tractor, maybe Mahindra and some Escorts and 2, 3, 4 players were there in the market. And the balance sheet of the company was very good. So whatever money I had that point of time, I invested into Punjab Tractor. So luckily, it went up 5-6 times in the next 3-4 years.
Punjab Tractors. How much did you invest? How much money did you make?
I think 90,000 rupees I invested in.
You invested 90,000. Ladies and gentlemen, 90,000 rupees, the first investment in Punjab Tractor. In the year?
89.
89.
Yeah.
Okay. And how much did you make in that?
It went up 4-5 times.
Okay. But that's not why you're here today, right?
Yeah.
You're here today because what you did after Punjab Tractors.
So I am here because of Nikhil Dalmia.
No, you're here because of ET now. Let me put it this way, because we are committed to just get the right financial advice for all our viewers. So a little bit of 30-second plug, I guess, once again from my side, for my channel. So what happened after you bought Punjab Tractors? I mean, then did you make money in the .com boom?
No, after that I made money in ACC. Like so many investors made money in ACC. I think that was the first real boom. A lot of people must have seen in their life of my generation. During ACC, everybody made money. So I was not exception. I also made money in ACC. So
after that?
And after that, I bought so many shares I don't remember. But in every bull market, luckily I got some shares which really multiplied.
So over the you've seen cycles, good cycle, bad cycles, Harshad Mehta crash. It's quite ironical that 50 meters from here, if I go that side, I've been told that ACC was traded. That's what I've been told, and some old timers would actually recall that. That's the this is the floor where ACC, and this is the building which has seen many boom and busts. I always get this emotional feeling when I come here, and it's an extra special feeling when I come with Vijay here because Vijay has been a practitioner. So Vijay, over the years when you bought stocks, you've seen booms and busts. Things keep on changing in the stock market. So tell me 3 rules which you follow when you buy a stock. 3 rules where you will not compromise irrespective of how good or bad the stock is.
You see, we learn every day.
We are calling them the Ramayana rules, right?
Ramayana rules are different. Okay, you want me to say
let's start with the Ramayana rules. Now the Ramayana starts. Not in the literature manner, but in Vijay Kediya style.
Okay, Ramayana rules. Be courageous, be fearful. Situation apply. Okay. Be courageous when odds like economy, politics, business environment is in your favor, and be fearful when opposite happens.
Okay, so let's take a pause now. You're saying that be courageous and be fearful. So normally people like to buy stocks which are popular in nature.
Which are?
In the .com time, everybody wanted to buy technology stocks. In the last bull market, everybody wanted to buy infra names. Now consumer stocks are in fashion. But you are saying that when you are buying stocks, you may be lonely. You may not buy popular stocks.
Yes.
You should buy stocks. You should have the ability to think different, and you should have the courage to buy. So explain that.
Now, obviously, this is what I have said, that the best way to make money in the market is knowledge, courage, and patience.
Knowledge, courage, and patience.
Yes, these
Let's
three
talk
things
about
are very important. Knowledge to identify good company, good sector, good environment, and courage to buy in a good quantity, whatever money you have. I'm not saying that you put 100% of it, but it should be a substantial part of your holding. Otherwise, even if the stock multiplies, you will get nothing. So that is also very important. And the third thing is patience. You need to keep patience because you never know when the stock is going to move up. Even you buy a stock, it may not move for 2 years or 3 years. But if your story is right, your conviction is right, then you have to stick to your stock.
Your next rule is that don't put all your eggs in one basket.
Yeah.
So if you say that have conviction to buy, if you have conviction to buy, then why diversify? The conviction is tabhi to loge na. And then you're saying that don't put all the eggs in one basket.
Here what I am saying, I've related this thing to Ravan. Ravan put all his eggs in Sita, okay, because he deployed all his army, all his children, all his brothers, everything just to conquer Sita, just to conquer Rama, you can say. So this is what I derive from here, and it's a very common saying that don't put your all eggs in a basket. In the sense, like suppose I bought Stuart and Lloyd, okay, at 275 rupees. That was way back in 2003 and 4. So, but that was a part of my holding. That was not that I did not keep all my money into Stuart and Lloyd. Today the stock is 20 rupees only. Just imagine it is only 10% of what price I bought it for. So this is, you should not keep all your eggs in one basket.
Okay, now next rule Vijay says, don't underestimate the power of monkeys.
Yeah.
Now, I'm assuming that you mean medium and small cap stocks.
So don't underestimate the potential of small and mid caps. Like the mistake Ravan did was he thought that this monkey and banar or bhalu or ye titar or itar jo bhi hai, ye sab to Ram ke aise वैसी सेना है, ये उनका कुछ नहीं कर सकते हैं. So he couldn't understand the potentiality of those soldiers. Similarly, same thing is applicable in the market. Mid cap and small cap can really give you a handsome return. So don't underestimate the power of those. Yeah.
So to be a good investor, read Ramayana first.
Yes. I'm not saying in a religious way. It could be in a like a story.
Okay. The management of the company is very important, and Sita is management.
Yeah.
And Ram is
here for a reference purpose.
Okay.
Because management of the company is very important. I would like to tell you, if I do not invest in any company, usually 99% in any company where management is questionable. So here I have referred Sita as a company and Ram as a management. So management, good management in bad business is better than bad management in good business.
Okay. So now that we've really understood your thought process, let's look at a practical example. I guess people who track you, who know you, they know about some of your famous stock picks, and the pens are getting ready. So we'll talk about his stock ideas in some time. So I know the papers and pens are opening up. Neeraj, I think they'll have to wait for another 5 minutes because what I want to, please tell me.
Yeah, in between I would like to conclude with the last 10th question. That is, who is the best investor in Ramayana? Could anybody please tell me who is the best investor in Ramayana?
Best investor in Ramayana.
Who? Hanuman, Lakshman, Vibhishan, Karan, Kumbhakaran. Anyway, it could be anybody. What I am referring here is Vibhishan. He is the best investor because usually people ask that everybody talks about how to enter the stock. Nobody teaches how to exit the stock. Vibhishan is the best example. When the focus of the management changed, he exited the stock. Okay, he exited. So that is the best example of an investor. And second thing, remember, he invested in a good management because he had a track record of the management. So when a good management with a track record was in distress, he was smart enough or cunning enough to invest in that company. So similarly invested into Rama. So this is also.
So I think I have not read Ramayana, but I'll be inspired to read Ramayana when I go back. My wife keeps on telling me, let's start being religious and start telling my 5-year-old son something. So now I understand the importance of Ramayana in investing. So let's understand from Vijay some real life examples. That's what I guess we want to understand here. And I promise that we'll talk about some of his recent ideas. Vijay, I want you to walk our viewers and some audience here about your investment in Atul Auto. How did you identify it? It was a very lonely investment. I think when you bought the stock, the market cap was less than 100 crores.
No, much less than that.
The traded volume was not even 10,000. You ended up buying about 15-16% of the company, and then the 2008 crash happened. So walk us through Atul Auto, how you identified it, why did you take such a big bet, and what patience did you adopt there?
It was very simple because there were only 5 players in three-wheeler industry. Atul Auto was the standalone producer, manufacturer, and 5 years all the big giants like Bajaj Auto, Mahindra, TVS, and Piaggio, and the fourth was Atul Auto. Company was also doing very well. So, three-wheelers market was rising 5% per annum. That time, I do not remember exactly, but maybe the overall market size of three-wheelers was some around in India was somewhere around 500,000. And this company was manufacturing just 8,000 to 9,000 three-wheelers. And industry was growing by 5% in that time. So I just did a calculation that 500,000 industry is growing 5%, so that is just 25,000 incremental. Okay, this company can garner a little bit shares from that. Then also it can multiply its productions. So thinking that only I bought Atul Auto, and obviously management was very honest, very fair, and I was lucky that I could get some quantity also. So
what was your average price?
Average price?
When did you start buying it?
I bought when market cap was some 30 crore, I think.
Market cap was 30 crore.
30 crore.
How many years
Then
did you
it
keep it?
Yeah,
How many years did you keep it?
I kept it for 10 years.
10 years?
Yeah, yeah.
Still holding Atul Auto?
Yeah, yeah.
I think this is the most important point which we underestimate as investors. The power of compounding, the power of patience. Equity investing is nothing else but buying patience and buying future purchasing power. Patience and conviction are the two differentiating factors which Vijay would again say. And again, my appeal to everyone here is that, please get them as an habit if you want to be real investors. Now, after you bought Atul Auto, the 2008 crash happened. So if your buying price was 100, I'm sure the stock must have come down to 50 rupees or 40 rupees.
No, 15 rupees.
So a 100 rupee buying price came down to 15 rupees.
The market cap that time was, I think, 10 crore or something.
Okay. It didn't give you panic?
I had no way out.
So what did you do then?
Nothing. I bought more.
What is the market cap today?
In 2015, it was 2,000 crore.
Okay.
2,000 crore plus. Now it is, I think, 1,000 crore, 1,100 crore.
Okay. So that's the power of compounding. You write the right business. You may be lonely in that investment. Nobody will like it, including me when I first spoke to him about Atul Auto. Generally, when we were discussing some, fine investing ideas, my jaws dropped because I never heard of this company. So you may be very lonely when you are identifying a stock or a good business, but you never get good prices when there is a lot of cheery consensus. Good news and good prices, ladies and gentlemen, does not come together. But the interesting part of today's conversation is not to talk about Atul Auto. I guess what we all want to know is that which will be the next Atul Auto, right? Right? So Vijay has told me till the time he does not hear a loud right, he will not give that name.
When I bought Atul Auto, I did not know that this could happen with this company. So it is very difficult to tell you now.
जो तो ठीक है, Atul Auto से आगे बढ़ते हैं. What are you buying now?
No, that is in public domain already. Everybody knows.
So let's talk about it.
No, everybody knows that I bought Karnataka Bank last time when I was on your show.
How many of you know about Karnataka Bank? Very few people. Okay, so for those who don't know, let's understand why did you buy Karnataka Bank?
Yeah, I bought it again. Karnataka Bank. It's very simple theory. All my stocks are very simple to explain.
People are writing down, please write it down. Okay, Karnataka Bank.
A simple company, actually, right now having a book book to price is only 0.7, I think 0.7 or 0.8. Company has projected to double its turnover by 2020. And a simple yardstick which is going on in the banking industry is if a bank has, and it's a private sector bank, it's not a public sector bank. So a lot of people have this confusion. Okay, so usually the yardstick is this: if a bank is having a NIM of 3% plus and GNPA is below 1%, then usually they give a book to price of 2. Okay, even 3 and 4 also. So what my call is this: this year this company will have a NIM of 2.80, and by FY18, I think it will cross 3%, and GNPA will come down below 1%, and I expect that maybe in next 5 years, business will double, and book to price will also double. So I am expecting it to be 3 baggers or 4 baggers by 2020.
Are you happy to own it for next 2-3 years?
Yeah, by 2020 I should be.
I think Karnataka Bank is coming out with the right issue.
This one, yeah.
Would you participate in the right issue?
Of course, it is 70 rupees like a mini bonus. I will apply more.
Okay, before I get to his next idea, do we want the next idea? Trust me, you don't know that name. It's not in public domain. But I want to talk about the existing names which are in public domain. Sudarshan Chemicals, a stock which we've discussed on a ET Now forum. I want to also understand what is the theory in why you bought Sudarshan Chemical. It was one of those lonely investments, I think, in 2014. Why did you buy it? And do you have plans to stick to Sudarshan Chemical for another 4-5 years?
For the simple matter, actually, luckily I was in China during those days, and I met a couple of people from chemical industries, and I realized, and they told me that China is really having a pressure. So for chemical industry is concerned because of the pollution, and I was near Beijing only, so I could see the pollution all over. So
I see pollution in Bombay every day.
Yeah, but not like Beijing. You know, that was really. So, and I remember in 1990s, Sudarshan Chemical was awarded to install this effluent plant. That time it was, you know, even the rules were not so stringent.
They were very environment friendly before the environmental problems started.
Exactly.
Okay.
So, and company was doing well also. They have, and they have, I think they have finished their capex. So, luckily I got some quantity and I bought it because of that.
Okay. Are you planning to stick to your thesis for another 3, 4, 5 years? Because the stock has seen a decent run-up.
Yeah, I should be holding.
Some of the other stocks which we've discussed with you on the public forum are a IT company called Repro. I think you own about 5-6% stake there. As of now, if I look at the financial numbers, it's like a sleepy company. Is your thesis of that company still intact? If yes, why?
No, it is intact, because when I bought, I knew that this company will take some time to perform, and I was expecting the actually the numbers from the new vertical which they have started. That was e-commerce thing, that e-tailing thing. So that number should start reflecting in the company from December onwards. So I knew that. So that is why I am comfortable.
You're happy to own it for another 4-5 years?
Yeah, that story has not yet started.
Okay. In one of my shows, you said, "Abki baar Sensex hoga 1 lakh."
Abki baar Sensex?
Hoga 1 lakh. 25,000 hai abhi to.
You see, I will tell you. When I say that Sensex will be 100,000 by 2020.
100,000.
100,000.
I'm writing it down.
This is what I have.
You're going live.
I have told you earlier also. 100,000. The idea is this: Sensex is just a referral point. Okay, I do not invest in Sensex stocks. I'm investing into mid caps and small caps. So what I mean by saying so is this, that my stock will grow 4 times or 5 times, okay, from whatever price I have bought. So all those my stocks are on track, more or less. So in last 2 years, more or less, they have given me handsome return, and I expect them to further rise maybe 2 times or 3 times by 2020. So for me, index will become 100,000.
Okay. So don't look at the Nifty, look at the individual stocks in terms of magnitude. Never ever underestimate the power of great franchise and some of the mid-cap stocks. Okay, 2-3 minutes more, and I promised you that this Diwali is all about helping you reach your financial goals, prosperity in a very, for a genuine investor, I guess we again are offering this forum where you can learn from stalwarts like Vijay and Porinju, whom you will hear in next 2 minutes. So Vijay, tell us something which is not in public domain.
Not in?
Public domain.
Okay, I recently bought Mahindra Holidays.
Okay, I can see a lot of scribbles have already started. People are writing that. Come on guys, you don't have to write the name, it's easy to remember.
No, it's an expensive shares actually. Let me tell you, I was expecting it to fall along with the market. Although market failed, but Mahindra Holidays did not fall. So out of temptation, you can say that I bought the stock. It's an
Is it a recent purchase? Is it a recent purchase?
Yeah, recent. I bought it day before yesterday.
Oh. Oh.
No, but it's an expensive stock, please remember.
Okay.
Yeah.
No, it's 450, it is expensive. Because it is 450 rupees, it is not a 20 rupee stock.
No, that I know, valuation-wise.
Okay. What is your thesis?
Hmm?
What is your thesis? Why did you buy it?
It's also simple. Now, tourism market in India is $112 billion as of now today. Okay, and they are projecting it to be $250 billion by 2020. 80% of this tourism market is coming from the domestic tourism. And this is where this Mahindra...
So if you bought an expensive stock, aren't you contradicting your investment style? Because you always say that buy a stock which is cheap, because if you buy an expensive stock, you will not make money.
Yeah, so I'm ready to wait for 1 year, 1.5 years or 2 years.
And do you think this could be a potential 3-4x?
Could be, it should be. Because right now, just imagine India is having 25 crore households in India, okay? And they have membership of just 200,000 members they have, Mahindra Holidays. So they themselves are expecting it to they have a potential to make it to grow to 9 times, maybe in next 10 years. This company has potential.
You know, once Buffett said that if you want to be a successful investor, before you become a successful investor, become a successful human being. And that is what I think I've always appreciated about Vijay over the years. Like they say that behind every man there's a successful woman. So Vijay also has a secret story to say. So Vijay, I've been told that you've gone beyond being a bathroom singer. Right?
You mean I sing in train, yeah?
So the hidden secret of Vijay Kediya is that he likes to just go beyond singing. We've had some nice evenings where I've enjoyed the company of his songs. So Vijay, before I give it to Neeraj.
सब चले जाएंगे यार वो सब
Come on, do we want to hear Vijay Kediya? See, the right is more than the stock idea. So people think that Vijay Kediya is a better singer, not an investor. Come on, let's hear it from you. Whom would you like to dedicate your song to?
My first love?
Stock markets or wife? Or girlfriend?
Stock market. Stock market is my first love because I met my wife after I came to stock market. So I can say that stock market is my first love, and I can say that my wife is my last love because after that I did not love anyone.
So, shall we?
माफ करना. ओ करम खुदाया है तुझे मुझसे मिलाया है तुझसे मिलकर ही तो मुझे जीना आया है ओ तेरे संग यारा खुश रंग बहारा तू रात दीवानी मैं जर्द सितारा.
Come on guys, put your hands together. So let's do a dipstick before I give it to Neeraj. Better investor or better singer? Both. I like that. So Neeraj, I'm going to give it back to you. He spoke about Mahindra Holidays. Our next speaker, Porinju, comes from this beautiful city, Kochi. And trust me, you don't need a Mahindra holiday there. Everything is so beautiful in that city. Thank you very much. I'll give it to Neeraj.
Porinju, could you please come on stage? You know, the one thing that struck to me jab Vijay Kediya was talking about Ramayana. Welcome, Porinju Veliyath. The one thing that struck to me when Vijay was talking about Ramayana is that Ramji, Ramayana ki yudh jeette nahi if he didn't have one able ally with him. Who was that ally? Hanuman. Yeah, unless you have a very able ally and an advisor, you can't win battles. And what ET now has tried to do today is get you 2 Hanumans in the same venue to help you create wealth. So you heard one, that is Vijay Kediya. Now you hear the other one, Porinju Veliyath. Porinju, thank you so much for joining in.
Thank you.
Now, Porinju, we'll talk about how you invest and a few other things as well.
Good.
But I want to start off with the current scenario of the market too. Everybody is worried about one thing. November 8th, if Donald Trump comes to power, what will happen to markets? Yeah? Do you think it will have a big bearing on our markets?
It looks interesting question. I may be the most current, what do you call the crisis in the market. I heard a lot of people, they are worried about the US elections at this point of time. About Indian markets, they are worried about Indian market because of US elections. In fact, I am worried about the US. Looking at the quality of the candidates over there. And in fact, I think this is a very positive development for India. I used to get, and many of us used to feel, bad about some of our politicians who are becoming nedas or who are aspiring to become nedas. Their quality, and some of us call them jokers. That's a kind of culture we have been going through. So now the US kind of a country, they have posted to, I'm not talking really bad about anybody individually, but there is a perception, which is true also, the quality of the candidature for the presidentship. Most of us feel a country like US could have got much better people. I think all of you will agree with me. Again, they are not bad people, but when somebody aspires to be the leader of a country, an economy of $18 trillion, and these are very important. It may have some kind of economic impact on the long-term policies, but ultimately for an Indian investor, I would say this is a non-event. Whoever wins.
You sure of that?
Yeah, 100% sure.
Okay. The one interesting thing, somebody had tweeted this about 4 months ago when Donald Trump was leading, that I think if the Democrats field Narendra Modi against Donald Trump, they have a better chance of winning. And I think that was a very interesting tweet that I saw, quite frankly. But having said that, if this doesn't have an impact on the market, Porinju, let's talk about how the last 6 or 9 months have been, somewhat 2072. How has that been, according to you? And how do the next 12 months look like for the equity markets?
As far as the investing community, the stock pickers are concerned, I think somewhat 2072 was a great year. I think wealth is made rarely like that earlier. The Sensex or Nifty won't tell you the story of what happened in the last 1 year. I'm very sure about that. It is maybe around 9-10% or maybe 11% up even as on today. But I think people sitting in this hall, at least 90% of them have made at least 100% more than Nifty and Sensex. That was because of the opportunity in the mid caps and small caps.
Have people made that? I mean, anybody who's made 90-100%, please raise your hands. Because I know Vijay Kediya and Porinju have made that money. Okay, Porinju, so the majority of the people have
100% more than the index returns.
Okay.
That I think mostly people have made. Other than the large mutual funds, they have a limitation to perform in such kind of markets.
Sure.
So that 2073 is coming up. Everybody is looking for that. And, mostly people are not sure about the valuations at this point of time, especially the small cap and mid cap. There are many kind of worries about the structure of the market, the way it's moving up. The hundreds of stocks have gone up, doubling and going 5 times and 10 times. If you see a lot of small caps. Neeraj, if you remember, I have been talking since last 2 years about the management turnarounds, the management quality of companies. This has been a subject of debate in the last 2 years because India has a very big relevance for this subject. When we all buy stocks, invest into stocks, even trade in stocks, this is something first coming to all our minds.
Yes. And
there are many market gurus, have been cautioning investors, don't buy companies with, dubious reputation or the promoters who seems to be unethical or dishonest. Or chore managements, should not go anywhere near to those companies. I remember I have been clearly advocating buying
into chore management?
Chore managements by perception in the last 2 years.
By perception.
If you see somewhat 2072, if you take the top 100 companies by gain, 95% of them with the highest gains in the last 1 year, they are companies with the so-called chore managements. And this is this is not something I'm talking as a joke. This will continue to be so next 1 year. The 2073, this will be the theme.
But should people...
When I say chore management, this is something different I'm talking about. By perception, investors dislike the management. Investors don't trust those kind of managements, the people behind them, the promoters. But the business is good. Shall I tell you something? So the question is, there are two kind of companies we had, if you look 1 year ago. On the one side, we had the Chore managements at 7p. I'm just telling an approximate figure,
Sure.
single digit P's. The other side, we had intelligent fanatics with 70p. And those high-class companies with the very top-class professional managements, highly ethical and honest managements, they are underperforming in the last 1 year. You can see the data. The other side, they have gone 2, 3, and 5 times and 10 times, some of them. So why this is happening? Because when everybody talks about bad and good management, there is a tendency for those stocks to get underpriced. And what is happening, even today, for next year also, this is a very important aspect investors should bear in mind. Because India is changing. India is changing in every aspect.
Sure. Porinju, I just have a small follow-up to that though. Because what happens is a lot of times if people go out and after listening to you, start thinking that let me go out and buy some of these Chore managements because they are cheap stocks, they might get caught in these stocks. How do you classify the good Chore managements from the bad Chore managements? Let me put it that way.
Let us put it the other way. The good companies with bad managements. Good companies mean good business model growing at 20-25%. And the business has got a relevance going forward. But it was badly managed all these years, all the decades perhaps. It was unprofessionally managed. Promoters were siphoning off money. They did not pay dividends properly. Those kind of issues. See, that is what I told, management turnarounds. The managements at inflection points. Why I told India is changing. See, why the promoters were remaining bad? That's a big question we all should think about. See, some of them were earlier, I'm talking the earlier, till now, in the last 10 years or 20 years, some of them were reluctant to pay taxes. You show, say, 20 crores profit, you have to pay 30-35% tax to the government. There was a tendency to avoid taxes. They were not willing to pay taxes. So they used to siphon out money or do something else. So in the process, the minority shareholders also suffered. The worst management, they want to take all the benefits. They don't want to even reward the minority shareholders. So they used to do things accordingly. They will merge a group company which has no value at a high price. So those kind of things are happening today and siphoning out and creating black money. So India is changing in many of those aspects. It may not be possible going forward. It's going to be difficult for you to deal in large amounts of black money, siphon off money and take out money from the country itself. So thus the laws, the systems and processes are getting stricter. The GST is being implemented. That will be another block for the Chore managements. So I'm telling you, many of those companies are available still at single-digit P's, and these companies are growing at 15, 20, 25%. And the business has got a relevance going forward. So that is where you can still make money in somewhat 2073. See, I'm telling you today, I'm telling you a real fact which happened. I came yesterday evening to Mumbai. A friend of mine called me up in the morning. He gave me a news. As a bullish news to buy the stock. The promoter died. Recently, the promoter died. The stock has gone into upward circuit today. I don't want to tell the name of the company. Some of you will be smart enough to find it. So this was the scene in this country in the last 2-3 decades. Many investors are looking for the promoter to die, for the stock to go up. I don't know the young generation, the old people in the stock market will agree with me. There are companies like that. There are large companies in this country like that, believe me. So this is a very, very worrisome trend, but I'm telling you, this was the past. India is changing. The people are changing. Professionalism is coming into the system. Even small companies, they are appointing investor relation agencies. They are making better, more transparent, more revealing annual reports. They give notices to BSE very often, talking about whatever is happening. And some of them are asset rich. 20, 30, 40, and half a century old companies, available at throwaway prices. They are having huge assets. Because of the perception on the management, people are not willing to touch. And the management also liking it. They were also siphoning off money and doing all those kind of nonsense. Things are changing, I'm telling you. So if you can identify a company at that kind of an inflection point, maybe the new generation is coming and taking over the company. He's asking, Dad, it's fine, you sit at home, I will take care of the company. The son or the daughter, they may be well educated, they know the value of being ethical and professional, and how can you create wealth through the market capitalization, growing the company. And you know, you have that magic of compounding when it comes to managing a company and creating wealth. And India kind of a dynamic economy, you know, some of these small companies, the penny stocks what you are seeing today, they can create huge wealth going forward. So one thing I can tell you, the worry about the high valuation in the small cap and mid cap, which is what I've been talking about, it's not universal. See, I talked about 6 and 7 P, a company growing at 20 and 25%, which was like such low valuation because of the management perception.
Sure.
Now when the management perception is changing,
you can go out.
And the company, not only the perception changing, management is really doing better things to create wealth through the market cap growth.
But
so these companies might have already gone 10 times in the last 2-3 years.
Right.
Maybe it can go by another 10 times in the next 3-4 years' time. There are companies like that. I'm very confident, and there are a lot of them. Of course, I'm not going to talk any small penny stocks in this gathering, you know, because that doesn't look really worth it.
Right. Okay, but we'll talk about some investment ideas as well. But Porinju, one thing, and then we'll also, of course, talk about some investment ideas and also get Vijay and Porinju both on stage for the Q&A too. But Porinju, my question to you is, a lot of people ask this, that Porinju फार्म हाउस पे रहता है, ट्विटर पे रहता है, टीवी पे रहता है, रिसर्च कब करता है? So you know, let's talk about the style of investing. You know, Vijay was talking about the principles of Ramayana. What are those 2 or 3 things that you look for when you buy companies? You know, you're talking about separating good companies, bad companies, or chore managements also. How do you identify these companies?
I don't really consciously look at these 2 or 3 factors of a company.
Okay.
I think when you tell a name of a company, you know, I think a million things comes to my my mind, to my RAM, whatever you call it. That is because of that perhaps my experience in the markets.
Right.
I have been not researching, you know, I never researched as typically what people talk about. I'm not a person doing number crunching much. And I don't research more than 5-6 minutes on a company, to be very frank. I have not done it. You know, but I'm aware. I keep my eyes and ears open. Of course, I don't keep my eyes open while sleeping. That's true. But it's a 24 hours thing. You know, once you are passionate about that, any subject, not only about equity investing, you are living in that. So I live in equities. I'm always, you know, being aware of it, but very relaxed. Because I have got a style of keeping investing and exploring equities very simple. I don't complicate it much. So I have started my career in the trading ring in Mumbai. In fact, I am one of those who got injured in the 1993 bomb blast. I was standing over that side. This is the ring. Yeah. This was the ring, no? Yeah.
Yes. Today nothing will happen. So please, people sitting out there, don't worry.
So I have grown in this trading ring since 1990. I left Mumbai in 1999, went back to my hometown for a peaceful living. I didn't love the traffic and you know, an average Mumbai, active Mumbai, he'll be spending a very important part of his life on road, in cars, or in the bus or whatever.
Porinju, you're rubbing the wrong nerve out here. Please don't do that. None of us like talking about Mumbai traffic because we suffer from it every day.
Studio, it took 1 hour for me to reach the BSc trading hall. So I think there is a serious issue about this. This is also important for the equity investing, this aspect. Now, how many more cars Mumbai can absorb? It's a big question. So one need not be very bullish on the automobile industry going forward. I know if you have got, if you identify blue chip companies in automobile, they're doing well. Maybe they are going through the best of numbers in a, you know, the nearby period, and there are some of them are highly fancied by the foreign institutions and even the big mutual funds, and some of them may be quoting at 30 and 40 price earning multiples, one should be cautious. Of course, we came through some other subject, but it's very important. So that is how perhaps stock ideas happens.
Right.
So I think I'm not very bullish on the automobile stocks, though everybody talks very bullish about that because these stocks are staying at the highest level. Most of them are quoting at the historic prices. And India has potential. We have more people potentially to buy cars, but we don't have roads. So that's a very, very, very important issue. I think even the tier 2 and 3 cities in the country, all over the country, they are suffocating. The small towns cannot, nobody can park the cars. So that landscape of using cars and buying cars can change. Now the Uber kind of new generation business can, I don't know whether they can bring down the number of cars on roads. So this is something, a very tricky subject. Maybe the sales of car companies may not boom as expected and as projected by many of the funds.
Okay. Before we get in Vijay for a Q&A.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.